A new psychological threat is quietly eroding the net worth of millions of investors. It is not inflation, it is not a market crash, it is a mindset. Financial nihilism. You look at the shifting economic goalposts, you see the rising cost of living. Exhaustion sets in. Today, we are counting down the 5 dangerous money illusions born from this mindset. We start from the subtle traps of modern spending. We end at the number one belief that mathematically guarantees you will stay broke. This is how you unlearn the illusions. This is how you reclaim your future. Number 5. The speculation substitute. Traditional wealth milestones feel out of reach. The slow path to wealth feels too slow. So you look for a shortcut. You turn to prediction markets. You trade event-based contracts. You treat sports betting as an investment strategy. You believe a faster game will compensate for economic headwinds. That is an illusion. Gamified speculation is not a proxy for capital allocation. It is a dopamine loop designed to extract. It mathematically guarantees the transfer of your wealth to institutional bookmakers. You are not beating the system, you are feeding it. Number 4. The all-or-nothing asset fallacy. You look at the price of a starter home. The number is staggering. You calculate your monthly savings. The gap feels impossible to close. A dangerous thought takes root. You believe that if your cash cannot purchase a massive illiquid asset, it has no real utility. This justifies doom spending. You trade your future for fleeting luxury experiences today. You misunderstand the purpose of money. The primary function of capital is not always to acquire physical property. Its primary function is to acquire agency. A liquid portfolio of $50,000 might not buy real estate, but it buys optionality. It buys the power to walk away from a toxic employer. It buys the freedom to relocate for a better life. Agency is the ultimate luxury, secured. Number 3. The perfect information paralysis. You have access to an overwhelming fire hose of macroeconomic data. Yield curves, money supply metrics, geopolitical tensions flashing across your screen. You absorb it all. You hoard cash. You wait for the perfect, risk-free moment to deploy your capital. You believe you can outtime structural market risks. That is a mistake. Markets price in disasters long before they make the evening news. Waiting for absolute economic clarity means missing the invisible math of long-term compounding. There is no perfect moment. There is only time in the market, working in silence. The cost of waiting is higher than the cost of being wrong. Number 2. The premature preservation obsession. You are scarred by recent economic volatility. You watch the market swing. Fear takes over. You make a critical error. You prematurely adopt the portfolio of a 75-year-old retiree. You over-index in cash equivalents. You hide in ultra-safe instruments. You fear market drawdowns more than stagnation. You equate volatility with risk. For an accumulator in their 30s, short-term market fluctuations are mathematically irrelevant. The true existential risk is the silent, guaranteed erosion of your purchasing power over decades. Safety is an illusion when inflation is the reality. You cannot save your way to financial freedom. You must grow relentlessly. Number 1. The core virus, financial nihilism. This is the overarching defeatist belief that the entire financial system is rigged. You convince yourself that prices are arbitrary. You believe individual discipline no longer matters. You decide to completely opt out of the system. This is the ultimate wealth destroyer. The modern economy is undeniably flawed, but opting out is a self-fulfilling prophecy of poverty. When you surrender to nihilism, you guarantee your own defeat. You let the system win. The antidote is not blind optimism. The antidote is cold, rational math, executed without emotion. You reject the illusions. You step away from the noise. You rely on emotionless, automated capital allocation. You buy broad market assets. You hold them for decades. You ignore the gamified shortcuts. You ignore the doom spending triggers. You build a fortress of agency, one automated deposit at a time. The goalposts may shift. The macroeconomic winds will blow, but your strategy remains unbroken. By rejecting financial nihilism, you reclaim absolute sovereignty over your financial timeline. The math works, you just have to let it.